My dear students, welcome back to our channel. In this video, I will be explaining the Bachelor of Commerce 6th semester subject theory and practice of GST as prescribed by Osmania University and other universities of Telangana. We will go through the important questions and answers one by one. Let's begin with a quick revision. Unit 2. The first important short question is: 1. What do you mean by interstate outward supply? Interstate outward supply means selling goods or services from one state to another under GST. In this case, the supplier and buyer are in different states, so IGST, integrated GST, is charged. Example: suppose Ravi, a shop owner in Karnataka, sells mobile phones worth 50,000 rupee to a customer in Maharashtra. This is an interstate outward supply, and IGST is charged on the invoice. Key points to remember: interstate is equal to between two different states or union territories. GST type is equal to IGST, not CGST plus SGST. Collected by the central government. Required for e-way bill if goods move across states. Must be reported in GSTR 1 return. Easy tip to remember: out of state is equal to outward, interstate is equal to IGST applies. This is important for traders and businesses selling across states in India. Next important short question is: 2. What is interstate supply of goods? Interstate supply of goods means selling or sending goods from one state to another in India. When goods move across state borders, it is treated as interstate supply under GST law, and IGST, integrated GST, is charged. Example: imagine Priya, who owns a textile shop in Tamil Nadu, sells saris worth 1 lakh rupee to a customer in Kerala. Since the buyer and seller are in different states, this is called an interstate supply of goods, and IGST is charged on the bill. Important points: interstate is equal to between two different states UTs. IGST is charged, not CGST and SGST. E-way bill is needed for transport of goods. Must be shown in GSTR 1 return. Easy tip to remember: goods going from one state to another is equal to interstate is equal to IGST. This concept is key for all businesses doing trade across India. Next important short question is: 3. Return of goods under GST. Return of goods means when a buyer sends back the goods to the seller due to reasons like damage, wrong product, or poor quality. In GST, when goods are returned, it's treated as a supply in reverse, and proper documents must be issued. Example: suppose Ramesh from Delhi buys 100 shirts from Suresh in Mumbai, but 20 shirts are damaged. Ramesh sends them back. This is called a return of goods, and Suresh can issue a credit note under GST to adjust the tax. Important points: use credit note to reduce taxable value and GST. Return must be shown in GST returns, GSTR 1. In case of interstate return, IGST is adjusted. For intrastate, CGST plus SGST are adjusted. Easy tip to remember: if goods go back, GST goes back too through credit note. It helps both buyer and seller to stay tax compliant. Next important short question is: 4. Master and transaction levels in GST. In GST, master level and transaction level are two important concepts used in accounting and billing software. 1. Master level. It stores basic and fixed information that doesn't change often. It helps save time while entering repeated details. Examples: customer name and GSTIN, supplier details, Product name, HSN code, and tax rate. Unit of measure, kg, pcs, etc. Think of it like your phone contacts. Once saved, you use them again and again. 2. Transaction level. It is used for day-to-day entries like sales, purchases, and returns. This data keeps changing. Examples: invoice number, date of sale, quantity sold, amount and GST charged. Think of it like your daily call log. It changes every day. Easy tip to remember. Master is equal to permanent info vertical bar transaction is equal to daily entries. This structure makes GST billing and return filing easier and faster. Next unit, 2 important long questions. First important long question is: 1. What is intrastate supply of goods? Explain intrastate in word supply with an example. What is intrastate supply of goods? Intrastate supply of goods means the sale or transfer of goods within the same state or union territory. In such cases, both the buyer and seller are located in the same state, and the goods do not cross state borders. In intrastate supply, the seller charges CGST, Central GST, and SGST, State GST, on the bill. Both taxes are applied equally, 50-50 share. Example of intrastate supply of goods. Suppose Amit, who owns a clothing store in Bengaluru, Karnataka, sells shirts worth 10,000 rupee to Ravi, a customer also in Bengaluru. Since both buyer and seller are in the same state, this is an intrastate supply. On the bill, Amit will charge CGST at 9% is equal to 900 rupees. SGST at 9% is equal to 900 rupees. So, total GST is equal to 1,800 rupees. What is intrastate inward supply? Inward supply means buying or receiving goods, services from a supplier. So, intrastate inward supply means buying goods from within the same state. Example of intrastate inward supply. Suppose Ravi, a dealer in Bengaluru, buys 100 saris from a wholesaler also in Bengaluru. Since both are in Karnataka and Ravi is receiving the goods, it is called an intrastate inward supply. Ravi will pay CGST at 5% is equal to 250 rupees. SGST at 5% is equal to 250 rupees on 5,000 rupee purchase. Ravi can later claim input tax credit, ITC, on this tax. Easy tip to remember. Intra is equal to within the same state. Seller charges CGST plus SGST dot. Inward is equal to you are receiving the goods. Understanding this is very useful while creating GST bills and filing returns. Next important long question is: to explain the process of enabling GST and defining tax details. To manage GST properly in any accounting software, like Tally, Zoho, etc., we must enable GST and define tax details before creating invoices or filing returns. Let's understand this step by step in a simple way. Step 1. Enable GST in accounting software. To use GST in software like Tally, follow these steps. 1. Go to Features, press F11, Company Features. 2. Choose Statutory and Taxation. 3. Set Enable Goods and Services Tax, GST, to Yes. 4. Enter the company's GSTIN, GST number, and state name. 5. Save the setting. Now GST is activated for your company. Step 2. Create GST masters, define tax details. Once GST is enabled, we need to define the tax rates for goods services. 1. Create GST tax ledgers. CGST, SGST, and IGST accounts. Define tax rates like 5%, 12%, 18%, or 28%. 2. Create item masters, goods services list. Add each item with its HSN code for goods or SAC code for services. Assign the correct GST rate to each item. 3. Customer and supplier masters. Add details of all customers and vendors. Include their GST and state name. This helps identify interstate, IGST, or intrastate, CGST plus SGST transactions. Example. Suppose you sell mobile phones with 18% GST. You'll define HSN code 8517. Tax rate 18%, 9% CGST plus 9% SGST for intrastate. When you create an invoice, the software will automatically calculate the correct GST. Easy tip to remember. Enable GST once, define items and tax rates right, GST billing becomes light. This process ensures GST calculations are done correctly in every sale or purchase. Next important long question is 3. Discuss the intrastate outward supply of goods with examples. Intrastate outward supply of goods. Intrastate outward supply of goods means selling or supplying goods within the same state or union territory. When the seller and buyer are in the same state, it is called intrastate. In this case, the seller has to charge CGST, Central GST, and SGST, State GST, on the goods. These taxes are collected equally and go to the central and state governments. Example. Let's say Rahul, who owns an electronics store in Chennai, Tamil Nadu, sells a fridge to Kumar, a customer also in Chennai. Selling price of the fridge, 20,000 rupees. GST rate, 18%. CGST is equal to 9% of 20,000 rupees is equal to 1,800 rupees. SGST is equal to 9% of 20,000 rupees is equal to 1,800 rupees. Total invoice amount is equal to 23,600 rupees. Since both buyer and seller are in the same state, it's an intrastate outward supply and Rahul will charge CGST and SGST. Key features of intrastate outward supply. Supply within same state or union territory. CGST plus SGST are charged. Seller must show the supply in GSTR 1 return. Buyer can claim input tax credit, ITC, for GST paid. E-way bill is needed if goods value is above 50,000 rupees. Who is supplying? If you are selling, it's an outward supply. If you are buying, it's an inward supply. So here, since Rahul is selling goods, it's an outward supply for him and intrastate because buyer and seller are in the same state. Easy tip to remember. Pushpin intra is equal to inside the same state, outward is equal to you are selling goods. Pushpin, so you charge CGST plus SGST and not IGST. Understanding this helps in correct GST billing and return filing. Next important long question is 4. Write about hierarchy of applying tax rate details. Hierarchy of applying tax rate details under GST. When you create a bill under GST, the system or software like Tally, Zoho, etc. needs to know which tax rate to apply. This is done by following a hierarchy, a step-by-step order that helps choose the correct GST rate. Hierarchy of applying GST tax rate. 1. Tax rate defined at item level, highest priority. If you set a tax rate for a specific item, e.g. 18% for mobile phone, the system uses this rate first. Example, you sell a mobile phone with 18% GST, and you've set this at item level. This rate is applied no matter what's set at other levels. 2. Tax rate defined at ledger level, second priority. If no tax is set at item level, the system looks for a rate at the sales purchase ledger. Example, you didn't set GST for the item, but in the sales at 18% ledger, 18% is defined, it will apply this. 3. Tax rate defined at group level, third priority. If the item belongs to a group, like electronics, and a GST rate is set for that group, the system will use it. Example, electronics group has 18% tax. If no item level or ledger level rate is set, this will be used. 4. Tax rate defined at company level, lowest priority. If no rate is found at any of the above levels, the system checks company settings for a default rate. Example, you set a default GST rate of 5% in company settings. It is applied only when nothing else is available. Easy tip to remember. Item ledger group company. Top to bottom, most specific to most general. This system helps avoid mistakes and ensures the right GST is charged every time. Next important long question is 5. Discuss the steps involved in defining the tax rate at master level and transactional level. Steps to define tax rate at master level and transactional level in GST. To calculate GST properly in software like Tally, we must tell the system how much GST to apply. This is done in two ways. 1. Master level tax rate definition. This means fixing the GST rate for each item, customer, or ledger so you don't have to enter it again every time. This saves time and reduces errors. Steps. 1. Go to Item Master. Create or edit an item, example, mobile phone. Add HSN code, example, 8517 for mobiles. Enter GST rate, example, 18%. Save. 2. Create GST tax ledgers. Create ledgers like CGST at 9%, SGST at 9%, or IGST at 18%. Link them to GST. 3. Customer or supplier master. Add their GST and state. This helps decide Intrastate, CGST plus SGST, or Interstate, IGST automatically. Why is this useful? Because next time you sell that item, GST will be applied automatically. 2. Transactional level tax rate definition. This means adding or changing the GST rate while creating the invoice. Steps. 1. Create sales or purchase invoice. Select the item, example, mobile phone. GST is picked automatically from master. But if needed, you can change the GST rate manually at this step. 2. Apply GST ledgers. Add the correct tax ledgers, CGST, SGST, or IGST based on location. When is this useful? If you are offering a special rate or making a one-time deal, you can change the tax rate without editing master. Easy tip to remember. Master level is equal to permanent setup. Transaction level is equal to temporary change. Use master level for regular work and transactional level for one-time changes. This helps in accurate GST billing every time. I hope you understand easily each question. All the best students for your upcoming exam. For other subject quick revision. Important questions. Previous question papers. And syllabus. Links are available in description. Check out once. Thank you for watching. Like and share this video with your friends.